moment when the restaurant business has become really hit or miss within the U.S., especially the quick serve category. There's one company that's been reporting consistently fabulous results of late. I'm talking about Sonic, S-O-N-C. The country's fourth largest quick serve burger chain, number one drive-in chain, over 3,500 locations, 43 states. That's right, after languishing for years in the wake of the Great Recession, the company got pounded by better-funded competitors like McDonald's, a more value-conscious consumer, and its own internal execution issues. Sonic has clearly found its footing. Beginning in 2012, the stock had fallen down to $6. 6 and change. Since then, it's more than tripled, $22, shares rising 52% over the last 12 months. Sonic is once again a regional and national growth story. Terrific retro future drive-in concept. Even though the company has more than 3,500 locations, most of them are concentrated in the South and Southeast, especially Texas. So Sonic has a ton of room to expand, and because they rely heavily on franchising, system's 89% franchise, it's easy to grow without spending a lot of money. Now, Sonic just reported a week ago, delivering a 30 cents of earnings. It's a 1 cent beat. More important, company's system-wide same-store sales increased by 5.3%. That's excellent. Restaurant-level margins up 40 basis points year over year, despite higher food costs. Meanwhile, Sonic's been rolling out a new point-of-sale system at its company-owned stores, and it's got a new interactive menu screen that adds targeted messaging along with mobile and social media-based promotions. These new interactive screens are now in half of Sonic's company-owned drive-ins. They expect the rollout to be finished by the end of the quarter, with the system expanding to franchises over the next couple of years. Yet, even though the company delivered top-notch results last week, the stock is down more than $0.50 since it reported. Could this be a terrific entry point? Let's check with Cliff Hudson, Chairman and CEO of Sonic, to hear more about the quarter and where his company's headed. Mr. Hudson, great to have you on Mad Money.
It's great to be with you, Jim. I appreciate the opportunity.
Oh, absolutely. Cliff, listen, McDonald's down 1.7%. Burger King up 2%. Wendy's up 1.3%. Sonic up 5.3%. How are you able to put up that kind of performance versus the other guys?
Well, several years ago, McDonald's really had the momentum, and they're kind of sucking the air out of the room for everyone else. But that has really slowed for their business. We've really got a good head of steam up in a whole variety of ways. Through the recession, where we really shifted what we are hearing from our consumers and the degree to which we're getting that. We shifted our value strategy. We stepped up the quality of our food. Then we really got rebuilt our marketing team, got our product pipeline moving, hired new creative folks outside, and new media buyers outside. And the consequence of these things now, really 12, 13, and now into our fiscal 14, really compounding in a very positive way, driving the momentum of our business. We've seen it the last several quarters, and this May, our fiscal quarter ended May, really showed the compounding benefit of a multi-layered growth strategy. Several things feeding that, and we'll continue to feed it in the future.
All right, Cliff, I know that you had a great litany there, but there's something people hear in media, and if you're like me and you watch a lot of sports, there's two guys. These two guys I know. Every time I see the two guys, I want to go to a Sonic. I don't have a lot of Sonics in my area. How important are the two guys?
Well, I think they're quite important. They allow us several things. First of all, they're highly recognizable. We get that from feedback on a broad basis in terms of customers recognize our commercials up front because of our two guys, Pete and TJ. They're a lot of fun. In addition to that, because we have an array of products that cut across a variety of day parts, breakfast, lunch, afternoon, dinner, and evening, it's really extremely helpful to have our two guys there because that campaign weaves recognition with the customers regardless of the product line or the day part that we're promoting. So the two guys are important. They are not the lion's share of what's driving the business, but they are important to the campaign and important to our business.
Now,
and they're a lot of fun.
Oh, well, I think we love them. I have to tell you, we do love them. Now, but this point of personal serve that I like so, this is technology trumping things. Talk about what technology means for Sonic.
Right. So there are several technology initiatives we're working on right now. The first is to replace an antiquated point-of-sale system that is prevalent throughout our Sonic system. We now have that in all of our company stores, a few franchise stores, and we'll be continuing to roll it out this fall and beyond with franchisees, a new point-of-sale system, software-based versus the old system. This point of personalized service that you're referring to, or POPS, the acronym, is a video interface, a screen that our customers look to when they pull into a Sonic drive-in, park in the stall. They see our menu, but in the center they see a video screen that's promoting items that are appropriate by day part. And over time, we'll have an expanded play with our business. In other words, responsive to what the customer orders. Even now, with the stores in which we have it, it confirms their order. and tells them the price once they paid for it, et cetera. But we will have expanded use for this over time. It's only in half of our company stores right now. By the end of the summer, we'll have it, our fiscal quarter into August, we'll have it in the other half of our company stores. And then we'll turn to our franchise system and begin rolling it out with franchisees market by market thereafter.
And Cliff, the numbers definitely pick up, right? I mean, we just know that when you do the transformation, you get better numbers.
Yes. The management with the point-of-sale system will be helpful to the individual operator. The point of purchase, the POPs interface with the customer, does drive check, and because we're doing it with a little trade dress upgrade for the whole store, it's driving traffic as well as driving check once the customer comes in. So it is driving sales, and the combination of the two, sales increasing and labor and inventory controls with the POS, it's a winning combination that should really help our business grow over the next 1, 2, 3, 4 years.
All right, Cliff, one last question. I've got to ask this. There are many people concerned about inflation. I'm looking at your products. I know that dairy's up now. I know that beef is going up. People are worried about chicken going up. So they say to themselves, why should I own a restaurant chain when the stuff that they are serving has gone up in price so much that I know they can't be making that much money?
Well, this is a concern for all consumers. It's a concern for all business people. It's a concern for restaurant operators as well. We have a good menu, a broad menu, multiple day parts, but product lines and drinks and ice cream as well. And so we continue to look into that menu to find ways that we can raise prices, particularly on proprietary items that our competition doesn't rely on so heavily or maybe not at all, and find ways to be able to push price in those areas to offset commodity increases. And as you mentioned just a moment ago, with the sales increase we got in the third quarter, our company stores did have a 40 basis point improvement in operating margins. And as we continue to grow sales and better controls of food, paper, inventory, and labor with that point-of-sale system, we believe we'll continue to get margin expansion, even in a slightly inflationary environment.
Well, I couldn't agree with you more.
Makes it tougher, but we'll get there.
I couldn't agree with you more.
Great.
It is really a great story.
Great.
Thank you so much, Cliff Hudson, Chairman, President, and CEO of Sonic Corp. Great to see you, sir.
Great to see you, Jim. Appreciate the opportunity.
Guys, there's winners and losers in the restaurant business. This one's a winner. Stay with Cramer.